Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us live from the CME in Chicago. Tim, hello to you. Great to have you back with us. Certainly interesting to see crude rebounding just modestly. Talk us through some of the moving parts that you're seeing here, and I guess particularly what you see as being that longer term driver at this point.
Hey, nice to be with you today as well, Natalie. Yeah, I mean, if we back up a little bit and kind of examine price action that we saw last week, it helps what we saw today kind of put it in a bit of a context. We obviously the market's been very concerned with ample supplies, and the market has remained on the defensive. And so we got off to a pretty good start last week, but the market received the EIA number from the DOE number. It was late given the holiday week here in the States. Came out on Thursday and was arguably a favorable number. The market just couldn't hold that and closed very poorly on the week. Thursday and Friday, some pretty sharp down days. As we came into this week, I mean, the market initially came in again on the defensive. However, what you were just talking about here in the introduction piece, that Libya and Nigeria are going to be meeting on July 24th in Russia with other OPEC members to discuss the deal and the role that Libya and Nigeria play with the exemptions. The market interpreted that as most likely OPEC and the other members of this agreement will be trying to move to restrict the output, the new output that we're seeing from both Libya and Nigeria. So that allowed the market, I think, to stop the bleeding a little bit and allowed us to close slightly in the positive, but that's definitely not giving the market a lot of momentum here as we begin the week.
And talk us through how we're seeing investment banks starting to respond to this. It's a theme we've been discussing over the last couple of weeks. BNP Paribas, in fact, the latest now to join the chorus, as it were, when it comes to cutting some of their crude outlook forecasts.
Yeah, I mean, going back to November of 2016, all the big banks, BNP Paribas, Goldman, you name it, are all obviously very optimistic about the outcome of the production cut agreement, and those banks were long the market and were advising clients to be long the market as well. But as we started to see evidence of the production cut agreement, obviously these investment houses began to sour on the prospect of rising crude oil prices. BNP Paribas, in their most recent downgrade, downgraded their price outlook for crude oil by another 8%, which is pretty significant. And again, as you just stated, I mean, it's growing. It's on top of a long list of investment banks that have changed their opinion in terms of what the future outlook of crude oil prices appear to be. But one thing I found interesting though, Natalie, is if we look at kind of the managed money component of the market, the market overall has been reducing their long position or their long side exposure, but money managers have, at least going back to the beginning of July, have been adding long positions in the crude oil space, and it's still early to tell if that's going to be a trend that sticks. But I think a lot of analysts, from a risk to reward standpoint, are seeing limited downside, based on what possible upside could come. If some of the weaknesses that we're currently seeing are worked out or ironed out.
Certainly seeming to take a longer term view when it does come to oil. Meanwhile, in terms of, I guess, some of that shorter term price action, you're in fact forecasting, Tim, that we could see perhaps a retesting of June lows being on the horizon in the near term when it comes to oil's price point.
Yeah, I mean, I do, and it's really just a matter of the psychology that we're seeing in the market, and I just referenced it earlier, and if you kind of watch the way the market responds to releases of data, anytime we're now seeing bullish releases, the market will initially get the expected bullish response, but it turns over pretty quickly, and oftentimes we end up on the lows of the day. But it really just reflects. Initially, we had optimism where we could see bearish data and the market would pull price action down, but it would come storming back by close, reflecting the optimism in the market. We're on the other side of that now, where the market natural trajectory right now appears to be down, and even when we get bullish data, it doesn't hold for long. So it's just a very pessimistic marketplace, and unless we see something bullish or suggesting some kind of trend change, I think testing those June lows is definitely a high likelihood here over the coming weeks.
On that note, Tim Evans, we will leave it there. Great to have you back with us, though. Thank you so much.
Thank you, Natalie. Appreciate it.
Well, time now for a look at today's newspaper headlines, and in the SMH's Business Day.